Robert Kiyosaki, the legendary investor and world-famous market visionary, has just issued another warning.
But the problem is we're stacked with this massive debt, and all it's done is bump up the stock market and real estate market. The money has not gone into the economy. That's the sad part.
The world's largest economic crisis in history is on its way, and this crash could be more catastrophic than the one of 2008. 2008 was the first big crash, and a bigger crash is coming. In 2008, the stock market crashed terribly because too many people took out loans they couldn't pay. Also, major countries all over the world were printing far too much money, and this led to one of the worst financial crises the world has ever witnessed. Robert Kiyosaki is well known to have made a number of predictions of economic crises in the past, and they came to pass. The real estate guru predicted the recession in 2005, but many people didn't listen. The recession finally happened in March 2008, when the housing bubble in the United States burst, and hardship was felt all around. Kiyosaki was able to foresee the crisis, which did not only enable him to escape it, but also put him in a position to profit financially when the crash occurred. All markets go up. All markets will come back, but right now it's going to be a sled right down. It might be down for a long time. The 2008 market crisis proved to be the world's largest financial meltdown in history. However, it appears the incoming financial catastrophe will be worse than the 2008 crisis. But just how terrible will it be? And what would be the cause? But first, subscribe to Market Magnets and click the notification bell to not miss any of our following videos. Robert Kiyosaki is one of the first investors to foresee this impending financial doom, and he believes it will be brought about by mean reversions, the most powerful influence in the financial markets. The best-selling author of Rich Dad, Poor Dad revealed in an exclusive interview with the Daily Telegraph in Australia that the world was on the verge of a significant economic disruption that would have a huge impact on the global economy. He cited many big warning signs, including China's growth, America's domestic strife, and decades of Western countries printing too much money. We are living in the time of the greatest change in economic history. Something is happening in the world that hasn't happened before, he said. According to Kiyosaki, China is rising to take over U.S. dominance of the global economy, escalating the risk to a violent clash. The possibility of some sort of economic catastrophe was also increasing, but he did not specify when it would happen or how terrible the crisis would be. All he said is that it would be worse than that of 2008. With prices steadily rising, the Fed is no longer referring to inflation as transitory. Consumer prices in the United States increased 8.6% year-on-year in May, the fastest spike since December 1981. This might give the Fed additional incentive to keep increasing interest rates, which is already weighing heavily on the stock market. Many investment veterans see it as a vicious circle, and Robert Kiyosaki is among the first gurus to sound the warning. When inflation goes up, we're going to wipe out 50% of the US population, he pointed out to Stansberry Research earlier this year. The best time to prepare for a crash is before the crash. The biggest crash in world history is coming. The good news is the best time to get rich is during a crash. The bad news is the next crash will be a long one. Robert Kiyosaki just recently advised his millions of followers on Twitter. Let's examine what Kiyosaki really meant by that more closely. Kiyosaki is not exactly happy with the current situation of the American economy. America has stopped producing products. We produce bubbles, he said. What this means is that there is now bubbles in real estate, stock, and bond markets. In the world of finance, a bubble is created when an asset, such as a bond or a stock, trades excessively above its real value for a prolonged period of time. The author also condemns President Joe Biden's decision to postpone construction of the Keystone XL oil pipeline, which he feels is a key cause of rising energy costs. Joe Biden might not have made the right call on that one, and that is not good news for the average Joe. The average American doesn't have $1,000. According to a recent Bankrate poll, the majority of Americans don't have enough money in their savings to pay a $1,000 unexpected expenditure. It also makes things difficult for people who would like to enjoy their senior years. According to Kiyosaki, when the bubble bursts, the stock market will plummet. In other words, people who rely on their 401k plans are toast. We don't have a retirement. Our pensions are busts. So how does Kiyosaki plan to wiggle out of this one? It should come as no surprise that Kiyosaki favors safe haven investments like silver and gold. Given his gloomy outlook, precious metals, unlike fiat money, cannot be produced out of thin air, and they've been helping investors maintain buying power for decades. Gold's price has increased by around 8% so far this year. The Russian invasion of Ukraine has provided investors with yet another cause to look at precious gold. Although Kiyosaki owns gold, which he first bought as far back as 1972, he tends to prefer silver in today's economic climate. Kiyosaki announced in a March tweet that he had acquired 2,500 American Silver Eagle bullion coins and highlighted his bullish motivations for doing so. Gold already moved up. Bitcoin still too high. Silver 50% below all-time high. Silver is an industrial metal as well as money, the tweet says. Bubbles will eventually burst, and when they do, many people's wealth suffers significantly. Large drops, on the other hand, provide opportunities for investors willing to buy the dip. The good thing about a bubble is when they burst, everything goes on sale, Kiyosaki says. During the 2008 financial crisis, the author started buying real estate at bargain prices, which, given how much real estate has risen since then, was a smart move. He asserts that soaring inflation is an indication of a serious economic problem in the United States and that a recession could be around the corner. In a recent tweet, Kiyosaki said, "Bull markets make stupid investors look smart. Bear markets turn stupid investors into losers and smart investors into winners. Markets are crashing. Time for smart investors to become very rich winners." Here's exactly what he means by that. A bear market occurs when the market has plunged by at least 20% from its most recent peak. Investors are concerned about inflation, the Fed hiking interest rates, and the possibility of a recession in the United States. Kiyosaki is not the only one concerned about a possible recession. Elon Musk, the CEO of Tesla, and Charles Scharf, the Wells Fargo CEO, both agree the U.S. economy is in a recession. Jamie Dimon, CEO of JP Morgan, also feels the chances of the U.S. economy entering a recession keep increasing. Kiyosaki urges investors to make use of gold, silver, and Bitcoin to mitigate against inflation. When it comes to Bitcoin, Kiyosaki believes the U.S. dollar will crumble due to the country's heavy debt. Having Bitcoin, Ethereum, and Solana in your possession might help you guard yourself. Bitcoin has also been impacted by a result of the Fed's recent interest rate hikes. It is important to know that throughout history, irrespective of the primary drivers, every financial bubble had several things in common. Retail investors will show high level of speculative interest. There's always a serious belief that this time was different and a catastrophic ending that ruined financial wealth. This time will most likely be no different. So certainly there's going to be a crash. The big question is, when? A crash could perhaps happen tomorrow, maybe next month, next year, or even in the next decade. As a result, time is everything. Meanwhile, sitting on cash or maybe another asset that drastically underperforms either the market or inflation hinders progress toward your financial goals. Interestingly, crashes need an event that shifts investor psychology away from the fear of missing out and toward the fear of being in. It's at this point that the present liquidity crisis becomes particularly difficult. The stock market works on the basis of sellers and buyers consenting to make a transaction at a set price. Or, to put it another way, for every seller, there must be a buyer. Every market transaction involves both a buyer and a seller, with the primary difference being the price at which the transaction happens. When the selling gets serious, buyers will leave and prices will plummet. This is why the March 2020 recovery was so fast. There were those who were eager to buy from panicked sellers. They were just 35% below the previous high point. So what could be causing such a psychological shift? Nobody really knows. However, historically, market crashes have always been the result of a few issues such as an unexpected, uncontrollable incident that alters economic forecasts like war, geopolitical crisis, or pandemic. A sharp rise in interest rates. Unexpected spike in inflation. Credit-related events have a negative influence on the financial system, such as real estate foreclosures, defaults, or bankruptcies. Financial occurrence or currency crisis. Nearly every single global recession in history can be traced back to one of these 5 variables, the majority of which are credit-related. Most importantly, the occurrence is always unanticipated. This is what triggers the abrupt shift in the mindset from greed to fear. As an investor, you should never underestimate risk under the belief that it has been eradicated by some force, such as the Fed. Every period of speculative activity produces a crop of theories intended to support the speculative activity, and the speculative slogans are readily adopted. According to Dr. Benjamin Anderson, an economics and public welfare expert, the term New Era was the slogan for the 1927 to 1929 period. We were in a new era in which old economic laws were suspended. So now we know 2 things for sure. Robert Kiyosaki might be right again, and we have no clue when the next market crash will come. Luckily, we can take steps to safeguard our portfolios against a crisis without jeopardizing our financial goals. Such efforts, however, are not free of charge. They include managing portfolio holdings correctly to reduce the danger of concentrated investments, redistributing your portfolio holdings, gain profit from trades that are highly overbought and stretched. Laggards should be sold. Do nothing when you are unsure what to do. Cash is an excellent risk hedge. Don't underestimate the importance of bonds in a portfolio. To reduce risk, look for non-correlated assets. Adding any risk mitigation or diversification technique to a portfolio will result in underperformance compared to an all-equity underlying index. Kiyosaki's prediction may be correct again, but will people listen to him this time?